The taper continues. Mark, very few changes in the language in this statement today. The forward guidance remains the same as well, but the taper does continue. We're down to $45 billion a month in bond buys by the Federal Reserve. That's included in this statement. Down another $10 billion. The breakdown, $20 billion for mortgage-backed securities, $25 billion for treasuries. The Fed reiterating that those purchases are not on a preset course, but they will likely continue at that measured pace going forward if the information holds up. Now, again, no changes in the forward guidance language. The biggest changes here have to deal with the economy. There's a sense here that perhaps the Fed sees some traction in the economy. Information received since the Federal Open Market Committee met in March indicates that growth in economic activity has picked up recently after having slowed sharply during the winter, in part because of adverse weather conditions. Labor market indicators were mixed, but on balance showed further improvement. The unemployment rate, however, remains elevated. New language here. Household spending appears to be rising more quickly. Business fixed investment edged down, while the recovery in the housing sector remains slow. And again, the committee expects that with appropriate policy accommodation, economic activity will expand at a moderate pace. Labor market conditions will continue to improve gradually, moving toward those the committee judges consistent with its dual mandate. The committee sees the risk to the outlook for the economy and the labor market as nearly balanced. Now, again, with regard to the forward guidance, we saw those changes at the last meeting. No changes here in this statement. Again, the Fed reaffirming its view that a highly accommodative stance of monetary policy remains appropriate. And we see the same language with regard to what could happen to interest rates over the long term. It is likely will be appropriate to maintain the current target range for the federal funds rate for a considerable time after the asset purchase program ends, especially projected inflation continues to run below the committee's 2% longer run goal, and provided that longer term inflation expectations remain well anchored. Mark, the vote here was unanimous. Even Narayana Kocherlakota, who last time dissented, the Minnesota Fed president, he was on board this time. He had problems with the forward guidance language. He's apparently on board now. Again, the vote here unanimous. Very modest changes to the Fed statement, tapering down to $45 billion a month.